Hi there, very good morning. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar. This is the show where we'll take you through all the global and domestic cues and also tell you about the stocks that you must keep on your radar today. But let's get started with an eye on the globe and see how markets fare as far as the Wall Street is concerned. Now, US markets did end on a mixed note today, as traders are awaiting fresh inflation data that could guide the Federal Reserve rate decision next week. The S&P 500, that ticked up just about 0.1%, whereas the Nasdaq, that rose 0.2%. On the other hand, Dow, that however slipped a little bit, just about flat, but slipped 0.07% to that 47,850 level. Strength in tech stocks continued, with Meta up about 3.4%, Nvidia gaining 2.1%, and that helped the Nasdaq notch its 8th positive session in 9 at least. Now, investors are navigating mixed labor signals. Job cuts for the year have topped 1 million. Even as weekly jobless claims, they have fallen to the lowest in September 2022. Now, markets are still expecting a dovish Fed stance, with traders pricing in an 87% chance of a quarter point cut on December 10th, that is next week. Now, remember, today brings key data that includes delayed reports in consumer spending, incomes, and PCE inflation as well, plus the University of Michigan's Consumer Sentiment Survey. So we'll wait out for all of these cues and see how it all pans out. If we talk about how the indices have done in the past week, now for the week so far, S&P 500 is up just about 0.1%, Nasdaq 0.6%, and the Dow, that has gained about 0.3% for the week. So yes, that's about how the Wall Street fared, but let's also talk about some of the commodities that are yet again in focus. And firstly, let's put the spotlight on oil, which did move higher yesterday. That was supported by growing expectations of a US Federal Reserve rate cut, which could boost demand. Brent settled at around $63, nearly 1% higher, while the WTI, that closed more than 1% higher at that $59 per barrel mark. Now remember, as of this morning, some of these gains have been scaled back, but yes, that's how the market settled yesterday, about 1% of gains over there. Now remember, sentiment also firmed after Ukraine peace talks stalled, reducing hopes of Russian oil returning to global markets. There's a weaker dollar, rising geopolitical tensions, including US-Venezuela friction, and continued Ukrainian strikes on Russian energy assets. All of these have added further support to crude. However, like I said, gains were capped by higher US crude inventories and expectations of an oversupplied market. Now let's talk about how the yellow metal is faring. That was largely steady around that 4,200 per ounce mark. A weaker dollar supported prices, but higher US Treasury yields that have kept the upside limited. In fact, traders are now awaiting the US PCE inflation data and the Fed meeting next week, as expectations of a December rate cut continue to anchor sentiment for both of these commodities.
Okay, and let's shift focus to some macros then. In US weekly jobless claims plunged to 191,000, the lowest in more than 3 years, easing worries of a sudden labor market downturn. The drop, partly influenced by holiday season data quirks, contrasts with private surveys showing modest November job losses. Claims also dipped and planned layoffs fell sharply, suggesting a labor market that remains soft but stable. Economists say alternative trackers may be overstating weakness, with overall conditions still consistent with a slow-moving, stagnant jobs picture.
All right, let's move on and let's tell you what else is happening. Now, French President Emmanuel Macron met Xi Jinping in Beijing, seeking a reset in a relationship strained by tariffs, trade investigations, and geopolitical frictions. China has signaled openness to more French imports, while Macron pushed for a balanced relationship and urged Beijing's help on Ukraine. The leaders signed agreements across energy, agriculture, and education as well. Even so, tensions linger, from EV tariffs and cognate duties to Beijing's Taiwan stance and Europe's sharper trade posture.
Shifting focus then, Netflix has emerged as the top bidder for Warner Brothers' Discovery studio and streaming assets, according to a Reuters source. A move that could reshape Hollywood and potentially lower consumer streaming costs by bundling Netflix with HBO Max. Reports say Netflix's proposal is 85% cash, but the sale process has turned contentious. Paramount Skydance was accused WBD of favoring Netflix and demanded an independent committee to ensure a fair auction, even as rival bidders, including Comcast and Paramount, have sweetened their offers.
All right, then, on to the biggest story of the day then. Russian President Vladimir Putin received a warm and symbolic welcome in New Delhi yesterday, with Prime Minister Narendra Modi greeting him at Palam Airport and the two leaders leaving together in the same car. In a wide-ranging interview with the India Today ahead of formal talks, Putin questioned why the United States penalizes India for buying Russian oil while continuing to import Russian nuclear fuel itself, calling Washington's stance one that deserves examination. Now, this marks Putin's first visit to India since the Ukraine war that began in 2022, and both sides are using the 27-hour trip to reinforce a relationship rooted in defense, energy, and strategic cooperation. Putin also praised the BrahMos program and India's work on Russian-origin platforms, saying that they reflect the spirit of Make in India. The visit also saw the launch of a Russian education agency in New Delhi aimed at deepening academic ties as well. In fact, we caught up with a whole host of experts to decode what Putin's visit means. Let's take a look.
Seems to me clear that the major topic is going to be arms and the defense relationship. I don't expect that there will be much conversation regarding the Russian invasion of Ukraine, the worst violation of UN principles since World War II. And there will be questions about trying to increase the economic relationships between Russia and India. Except for oil, there really isn't much of an economic relationship. And if that relationship with Russia is going to amount to anything, there's going to have to be discussion about what trade can happen.
Well, I think one is the defense part of it, which is I don't think the Su-57 is a serious issue here. I think it is really more S-400s. See, that we had contracted for 5 batteries of S-400s. We've only gotten 3 because of the Ukraine war. So getting 2 more is important. Plus, we are likely to get even more batteries of S-400s. The second thing is the upgrade of the BrahMos into the BrahMos 2, which is a highly effective supersonic missile, but what the BrahMos 2 will be a hypersonic missile.
Okay, so that's the take coming in on from experts, but it's not just President Putin in New Delhi. He's brought his A-team, from Lavrov shaping up foreign policy to Belousov driving defense modernization, and Roskomos and Russia's top bankers in tow. A powerhouse delegation, Dragov takes us through the key players as a part of his team.
5+ defense and trade analysts and delegates coming to India with Putin. First, we're speaking about Sergei Lavrov, who's the Minister of Foreign Affairs. He's Russia's longest-serving foreign minister and central to Putin's foreign policy architecture. He's his right-hand man. Then we're speaking about Andrei Bulsov. He's the Minister of Defense, the key economist in Russia, involved in leading the military modernization mission in Russia, key to joint manufacturing of export of BrahMos. Well, that's a person to watch for. Third person is Maxim Restinokov, Minister of Economic Development, and is key to architecture of Russian economic strategy, and hence is a person to look for when it comes to strategic economic investments in India. Fourth person speaking, it's Dmitry Shugayev. He's the Director of Federal Service for Military and Technical Cooperation, FSMTC. He's the person involved in arms export and negotiation of architecture. Key role he's going to be playing in India's defense contracts. Another person coming with Putin is Dmitry Bokonov. He's the CEO of Roskomos, a very important space agency, hence is a person to watch for. Another person coming along with Putin is Alexei Likhashev. He's a Director General of Rostomos again. He's a leading Russian nuclear energy expansion in India and is key to technological transfer initiatives of small modular reactors, SMRs, something that India is watching for. Another person coming to India with Putin is Kirill Dmitriev. He's a CEO of Russia's direct investment fund, RDIF, and hence is an important person when we're looking at investments and economic cooperation architecture. He's overseeing the rupee ruble settlement mechanism for over 90 plus projects in India. Andrei Kosnes is another person coming along with Putin. He's the president and chairperson of VTB Bank. He's a person to look out for when we're talking about financial sector. He's a settlement and hence is a person to look out for. The last person we're highlighting is German Greff. He's the CEO and chairman of SBER Bank. This is Russia's largest bank leader and key to circumventing the SWIFT sanctions that were imposed by US. Hence, these are the people to look out for that Putin is bringing to India.
All right, thanks Raghav for that update. Well, the India-Russia trade story has really exploded from under $10 billion a decade ago to more than $70 billion today, driven almost entirely by energy imports. But India now wants to correct that imbalance with higher exports in pharma, agri and marine goods. Raghav is back again to take us through the numbers.
But India-Russia bilateral trade has reached the historic USD 70 billion mark. And this is the numbers for FY24. Speaking about the exponential growth, pre-pandemic, this trade stood at 10 billion. And this has been 5.8x increase in the trade numbers. Well, this is not it. The ambitious trade targets are set at 100 billion mark for 2030. Speaking about the trade targets and the trajectory so far, in 2014, the trade stood at USD 9.5 billion mark and has now reached 70 billion mark, only to exponentially grow at to the 100 billion mark. Well, India's exports to Russia are today worth 4.8 billion. Speaking about the chart in terms of how they are divided, with pharmaceutical products have 28% share in the total exports. Engineering and manufacturing products hold 32% share. Agricultural exports hold 21.79% share, and ceramics hold 8% share. Speaking about Russia's export to India, which are on the higher side, the maximum that India imports from Russia is crude oil and petroleum products, which stand at 88.29%. Coal and coke stand at 5%, again, a part of the petroleum junction. The combined energy and security demand of India is potentially put up at 93.69%, which makes the huge chunk of India's exports from Russia. And agricultural imports, again, have 3.6% mark in the total pie chart. These trade figures represent India and Russia's comprehensive partnership. At this point, again, the trades are tilted towards Russia's end. But given the current geopolitical considerations and geo-economic considerations, these trade figures can change in the coming 25 years.
Okay, Raghav, thanks for taking us through all of that. So lots of agendas and lots of important people who've come along with Putin to get the ball rolling on the India-Russia deals. But Russian President Putin's visit to India is also expected to boost the ties between the two countries. My colleague Sumita Karir spoke to Ajay Sahai, the Director General and CEO at FIEO, Sameep Shastri, the Vice President at BRICS, CCI, and Satya Karn Punya, the President at Rus Biofarm. Let's listen in to what they're expecting to see from the meet.
There's a huge shift of textile that was already existing, but the market has opened up further because of the sanctions. The Russian market is fairly new for all Indians to explore. So textile industry, you see a lot of FMCG goods, space, food security types. Like you have a lot of rice going to Russia. So it's a strong help that will happen. And this trade agreement, we are hearing that a lot of MOUs are going to be signed between the state heads as well as the ministers.
But what are the expectations in terms of what could be signed given the priority areas?
So as an industry body, the feelers that we've got is there's going to be good technology sharing that they're going to be talking about. The technology companies will have a better option towards CIS market because of Russia. And then we are also hearing that doors will open for frozen food industry, as well as leather goods, as well as pharmaceutical. In terms of because of the licenses issues in Russia, I feel that's going to be a big market that's going to go up.
Right, sir, but let me also ask you about BRICS, given the fact that India is going to host the chairmanship of BRICS in 2026, and President Donald Trump particularly has hit out at the BRICS for the kind of efforts that the BRICS set of nations, more importantly China and Russia, have initiated with respect to having, a local currency, especially for trade, a local BRICS currency for trade. How do you think that is going to be looked at, and is that a serious challenge then?
So, there have been a lot of talks for over a decade for BRICS currency, I feel. But what our government is doing is best. We are already trading with the Indian rupee in 22 countries, and trading in local currency, we still just need to create a marketplace where the valuation has to be right as per day-to-day needs of the export, which they're already creating the mechanism in a blockchain technology where it's going to be in equal measures and we'll be able to trade. And I feel that, local trade would definitely help the economics of any BRICS Plus nation. See, as India, as our Honorable Prime Minister and Foreign Minister has been stating that we are allies to everybody, but for us, our priority is our economic growth and our industrial growth and our agriculture and farmers to be protected. And that's what all our FTA agreements talk about, whether it's with UK or with Europe. And in spite of all the taxations that US has imposed, we are not bending. Its primary reason is that. And I feel that we will be strong-headed towards every. There's a huge shift of textile that was already existing, but the market has opened up further because of the sanctions. The Russian market is fairly new for all Indians to explore. So textile industry, you see a lot of FMCG goods, food security types. Like you have a lot of grains going, rice going to Russia. So it's a strong help that will happen. And this trade agreement, we are hearing that a lot of MOUs are going to be signed tomorrow.
Right.
Between the state heads as well as the ministers.
But what are the expectations in terms of what could be signed given the priority areas?
So as an industry body, the feelers that we've got is there's going to be good technology sharing that they're going to be talking about. The technology companies will have a better option towards CIS market.
Well, I just made a very short and very concrete speech. See, Russia is now focusing on localization of production. And there is a huge opportunity for Indian companies to come and partner with Russian companies in terms of being a partner for technology transfer, being a partner for supply of raw materials for making the active pharmaceutical ingredients. Then they can partner for high-tech projects like monoclonal antibodies, biosimilars, biotechnology. Then there is a space for the medical devices also. But the whole focus is to come and invest in Russia because right now it's the time to be there.
But India is a demographic dividend, right? And which is why I think countries across the world are looking at investing in India. But let's come back to the visit of President Putin. What are you expecting in terms of the kind of talks that will happen when President Putin arrives here in India?
So first I'll reply to your first comment that because of the demographic advantage India has a bigger market. Of course, yes. But Russia, the Western companies which were operating in Russia, they have left Russia. So now is the time that you have an opportunity to use it. And while we are talking, already the smart companies from India are already investing there. Yeah. Regarding our president coming to India and what kind of talks, see, I am not a political person, so I see that...
But what's the understanding that you've gotten in terms of the focus?
Well, I think the signal is very clear that's been given to the West that Russia is not alone. Russia has got solid allies, very warm allies, very strong friends like India with them. So that is the message. And of course, there are a lot of serious high-level talks about possible government-to-government cooperation in the future.
All right, so lots of collaboration expected across India and the Russia, across sectors, pharma, tech and more, especially defense. But with that, we'll get you more on that. On that note, we'll slip into a very short break. We'll be right. Look at how the Asia-Pacific markets have opened up. Well, it's a rather lower day coming in for the Asia-Pacific markets. This is after a subdued session that we saw on Wall Street as well. First, let's talk about China's Shanghai index. That's trading about 0.2% lower, close to that, just above that 3,860 mark. Hang Seng 2 is trading 0.5% lower, 25,780. 84 is where the index is at. Other than Japan's Nikkei, that's the one that's actually witnessing the major losses. It's down more than 1.5% right now, just managing to hold on to that 50,230 level. So yes, that's how some of the indices are faring. But better news as far as the Australian index is concerned. ASX 200, that's trading absolutely flat, but with a positive bias. 8,624 is where the index is at right now. South Korea's Kospi index, that's also managing to hold on to that shade of green, 0.7% gains there. 4,050 is the level where South Korea's Kospi index is holding. So yes, that's about some of the Asian indices. But now let's put the spotlight on Nifty and see how Nifty fared yesterday. Well, it posed a decent recovery yesterday and managed to end above that 26,000 mark after holding on to that level for almost the entire day. But as of today, yet again, following these Asian cues, we are expecting a very mild start, very muted start, about just about absolutely flat start for that matter. So yes, that's how the Indian markets are expected to open, Snehi. But the important thing is that we did manage to hold on to that 26,000 level yesterday.
Looking good. In fact, all eyes are going to be on the policy outcome today and what happens, because remember, the large part of the street is expecting a rate cut. So the markets could rejoice if that happens, or it could all go sideways if that doesn't happen. So we're all going to be after, keeping our eyes out on the MPC policy outcome after 10:30. So watch out for that. But other than that, all eyes are also going to be on select stocks that are going to be in focus on the back of their individual news flows. And Ashesha is joining us on the show to take us through that list. Ashesha, morning.
Morning, and first up, let's talk about ITC Hotels on the back of a block deal which is likely to take place. British American tobacco company BAT is looking to sell stake anywhere between 7 to 15%. Now remember, this is likely to happen at a floor price of about 205.65 rupees per share, implying 1% discount as compared to yesterday's price. So on the back of this block deal, which is likely to happen today, keep an eye out on ITC on the back of this. Interglobe Aviation, meanwhile, on the back of flight cancellations that were reported yesterday, Indigo has publicly apologized for the operational challenges that its flyers have been facing. Indigo has now requested DGCA to put a new FDTA, that is the new roster norms, in abeyance till the travel season. DGCA, of course, is yet to reply to this request that has been made by the airline, but for now they've gone ahead and publicly apologized for the operational challenges that customers are facing. So keep an eye out on Interglobe Aviation. The stock, remember, was the biggest loser on the Nifty 50 index yesterday. Zen Technology, on the back of an order win, the company said that they won orders worth about 120 crores from the Ministry of Defence. This is for supply of CTN, which comprises for various training simulators and equipment. So on the back of this 120 crore worth of order which the company has won from Ministry of Defence, keep an eye out on Zentech. Railtel will again be in focus for the second consecutive day on the back of order wins. Remember, yesterday too they had reported some orders, and now fresh order wins worth about 64 odd crores. This is from Central Public Works departments. Lloyds Energy, meanwhile, positive development coming in over here, where the company has gone ahead and signed agreement with Italian company Virtua Labs. This is for development of radar tech in defense and civil applications. So on the back of this agreement that Lloyds Engineering Works has signed, keep an eye out on this counter as well.
Thanks, Ashesha, for that update. Lots of stocks to watch out for. But there are a couple of more that we must watch out for. Let's start with HCL Tech, which is interpacked with strategy for AI-driven solutions. This is for scaled deployment of strategy mosaic for global clients of HCL Tech. So we'll watch out for how HCL Tech reacts. Next up, we'll put the spotlight on Power. A negative news flow coming in here. The company has informed the exchanges about the suspension of operations, temporary suspensions, that is, at its Mundra unit. So yes, that's what the company has informed, and the operations are expected to begin again by December 31st of this month. So yeah, of this year, that is towards the month end. But remember why this is important, because in the previous quarter as well, this Mundra plant was shut temporarily, and hence it did have an impact on the result. So we could see an impact in the third quarter quarter results as well. So that's about Tata Power. Moving on, Ashiana Housing Finance, a positive news flow here. The company's board is going to mull a fundraise on December 11th, that is next week. This would be via issuance of unsecured NCD. So we'll wait out for how the stock reacts to this latest announcement. Next up, let's talk about HUL, which is going to be in focus because it will trade ex demerger of its ice cream business, that is Quality Walls. While this development has been known, it becomes effective today. So we'll see how both of the stocks react. Next up, lastly, there is Scams, which is going to be in focus yet again because it trades X stock split in the ratio 1:5. So yes, watching out on all of these counters on the back of news flow.
So that's all the cues to watch out for in terms of the stocks. But yes, other than that, all eyes are going to be on some of the macro cues today back home. Of course, all eyes are going to be on the MPC rate decision. Along with that, because it's Friday, we're going to be getting the forex data as well, and the visit of Putin is going to be continuing. In terms of global cues, very important from the US, personal income, core PCE, and the price index numbers and personal spending numbers are going to be out. Now, remember, this is the Fed's preferred gauge of inflation ahead of their meeting next week. The rate cut or not depends on what the numbers look like later today. GDP numbers from Europe will be in focus and household spending from Japan. Other than that, HUL will be trading ex demerger of its ice cream business, and like Kanishka mentioned, CAMS will be trading ex stock split in the ratio 1:5. To subscribe for the IPOs of Vidyawires, Equis and Misho if you already haven't done so. And yes, lock-in period will be ending for ProStar Info Systems. So watch out for all of these cues to watch out for today.
All right, so lots of cues to watch out for along with the stocks that we must keep on our radar today. But with that, time now for a very short break. We'll be right back. More latest updates on what's happening in terms of regulatory action. Now, the SEBI has pulled up the Avadut Sathe Trading Academy for allegedly showcasing only profitable student trades while hiding losses and claiming guaranteed success. Now, a review found both trainers and students were actually in net losses, and the SEBI has now ordered the academy to return over 600 crore rupees collected in fee. Charu is here to take us through all of the implications. Good morning, Charu. Tell us what is the latest that you're picking up.
So the market regulator, Securities and Exchange Board of India, has come out with one of its biggest order against a finfluencer. We must understand that finfluencers are the people who use social media to give financial advice. However, if it is unsolicited or they are not registered with SEBI in any capacity, any market institution is not supposed to engage with them. What happened here is that one of the very famous influencers of the Sahyadri region, Avadut Sathe, and his academy known as Avadut Sathe Trading Academy, has come under SEBI's radar. The investigation had been going on since a long time, but one of the raids or search operations were conducted on his academy in the month of August this year, and a big order has come now. SEBI has found out that most of the trades that were being made by the people involved in his academy and his students were shown in a way that the losses were not shown to the public, only profits were shown, leading the public and getting more money from them in the name of courses. Now, what SEBI has done is that it has come out with two major amounts. Firstly, it has ordered an impounding of about over 540 crore rupees, but it has said that the ill-gotten gains are over 600 crore rupees. So a show cause notice has been sent to Sathe asking as to why an action should not be taken against him, impounding the entire amount of over 600 crore rupees plus interest. Meanwhile, he remains banned from the securities market and cannot trade in any stocks for now.
Okay, Charu, thank you so much for taking us through that. So yes, trouble continues for Avadut Sathe's academy, and we'll bring you fresh updates as and when we have on that case. But let's focus and talk to you about the biggest news piece. Indigo says major disruptions over the past 2 days are linked to transitional challenges in crew rostering under Phase 2 FDTL norms, leading to widespread delays and cancellations. The DGCA has stepped in, directing the airline to submit its recruitment plan, restoration roadmap, and detailed rostering data. Joining us with the latest developments.
Union Civil Aviation Minister Ram Mohan Naidu chaired a very important review meeting with the Indigo top officials along with DGCA and the ministry officials on the ongoing situation, the massive flight disruption faced by Indigo Airline. Minister has clearly directed the airline officials that they need to take immediate steps so that the inconvenience caused to the passengers, it should be reduced. And also, Minister has directed to the Airport Authority of India directors as well that they need to work in close collaboration so that the required assistance is provided to the passengers across the airport in the country the inconvenience should be addressed, should be reduced. In addition to this, the aviation regulator DGCA also chaired the review meeting with the top officials of Indigo Airline. Now, Indigo apprised to DGCA that major of the flight disruption is because of the revised or the phase 2 of FDTL, flight duty time that comes into existence from November 2025, that led to the severe crunch of cabin crew and pilots in the flight operations. But DGCA has clearly directed that some immediate steps or the measures have to be taken. First and foremost is that Indigo has acknowledged that they miscalculated the cabin crew requirement once the new norms comes into existence. In addition to this, Indigo has also submitted that they are seeking some sort of relaxation in the FDTL norms so that the flight operations can be stabilized. Indigo has submitted that the entire flight operations will be stabilized or can be stabilized by 10th of February 2026. So a long span of time it will take, but in addition to this, certain relaxation they have also sought. Indigo has also apprised to the regulator that they are going to reduce the flight operations from 8th of December so that this massive flight cancellation or the delays can be reduced, and the inconvenience that is being faced by the passengers, it can be reduced as well. DGCA has directed the Indigo that they need to submit a detailed roadmap of the cabin crew hiring, the rostering, and how they are going to induct the other staff so that the flight operations resume to normalcy. Indigo has also directed the airline to ensure that there has to be a progressive reduction in the cancellation, and also the airline has to submit all roster related data. In addition to this, there has to be a 15-day time gap has been given, that they have to continuously provide the necessary detail. So a very lengthy, detailed meeting was held by DGCA, by the minister, and now they have to submit the report. The airline has to submit the report, and the entire focus is on to reduce the flight disruption.
All right, so on the back of all of these disruptions, we did see that Indigo did see an impact stock as well, and it was the top Nifty loser yesterday, and today as well the stock is going to be in focus because the brokerages have also come out with weighing in on the airline's ongoing operational disruptions. First up, Citi has maintained a buy call with a target price of 6,500. That still implies an upside of about 20%. It says that Indigo's management has confirmed that operations were impacted, prompting schedule adjustments to stabilize the network. It expects these recalibration steps over the next 48 hours, that is, to gradually improve on-time performance. Also, that Indigo's vast and complex network, that means disruptions escalate faster than peers, and the new FTDL norms, they have further reduced rostering flexibility. It says, while the near-term challenges may continue, Citi expects operations to normalize within a month's time. And on the financial side, it has, however, cautioned that a weaker rupee and rising ATF prices, these are the factors that could pressure profits in what is typically a strong Q3. On the other hand, we have Morgan Stanley, which has reiterated its overweight stance, but cut the target price a little bit to that 6,540 level. This is down from 6,698 rupees earlier. It says that rising cost headwinds across the industry, but it does expect tighter capacity to support gradual fare hikes. It has cut FY27 and FY28 EPS estimates also about 20%. That's citing higher depreciation and finance costs, though EBITDA cuts, they are more modest at 1 to 4%. Now remember, the brokerage believes that tight supply, elevated cost across peers, and increasing international exposure, these are the factors that will continue to support Indigo's valuation multiples. So overall, over the long term, brokerages do remain constructive on Indigo, but there might be some short-term turbulence.
Okay, well, that's the take on Interglobe Aviation. Remember, top Nifty loser yesterday, almost another 3% of cut in intraday trade is what Interglobe saw. But on that note, we'll slip into a very short break, bring you more some stocks to watch out for. The big one today is going to be ITC Hotels, and all eyes are going to be on ITC Hotels on the back of the block deal that we're expecting to see. Now, if you take a look at what is going to be happening today, the block deal is going to be happening, and the seller is expected to be British American Tobacco. Remember, they always wanted nothing to do with ITC Hotels, and they have been very clear about the fact that they are going to be paring stake at the right time. So that is something that is going to be important to watch out for. British American Tobacco is expected to sell anywhere between 7 to 15.3% stake in ITC Hotels. Now, that being said, 15.3% is their entire stake holding in ITC Hotels. Now, if you take a look at what this could mean, from Bloomberg, we understand that this is going to sum up to about 14.58 crore shares at a floor price of 205.6 rupees per share, which is a 1% discount to where ITC Hotels price closed yesterday in trade. But if you take a look at what this translates into Indian rupee, this is anywhere between 3,000 to 6,600 crore rupees. Now, just to give you some more context, on 14 February this year, BAT, which is British American Tobacco, in its con call, said that they are looking to divest stake in ITC Hotels. They will be divesting the entire stake at the right moment, and this is going to be used to bring down their net debt to EBITDA leverage to the targeted 2 to 2.5 times. So yes, this is being done to bring down BAT's debt, which has been under pressure for some time. But yes, all eyes are going to be on ITC Hotels on the back of this block deal and how the stock reacts.
All right, so all eyes on ITC Hotels on the back of this block deal that is expected. But of course, next up, the most important event is also going to be the Reserve Bank of India's policy this week, which is widely expected to cut interest rates by 25 basis points. Now, a Reuters poll shows nearly 80% of the economists are eyeing a rate cut this time around. That would be followed by a long pause going into the next year. Now, what all do we expect from the MPC meet? Mitali Jain is here to take us through all of that.
Right, so all eyes are on the upcoming MPC meeting as the markets are actually braced up for another possible policy move by the Reserve Bank of India. And according to the Reuters poll, nearly 80% of the analysts actually expect a 25 basis point rate cut, which could bring down the repo rate to 5.25%. Also, now this expectation is strengthened as the RBI governor has given his recent remarks stating that the current economic data also suggests a room for further rate cuts. Now, let's have a look at the RBI's updated projections after the Q2 FY26 GDP numbers came, and now the growth is expected at 6.8% for FY26, moderating slightly to 6.4% in Q1 FY27, while for inflation is projected to fall down sharply to 2.6% before stabilizing at 4.5% in Q1 FY27. If you talk about the global factors, the global risk still persists and the investors seem cautious around the US tariffs, 50% of tariffs that the US has proposed after the FIIs seem to pull out $17 billion from the Indian market so far this year. Now, looking at the past trends that the RBI's rate cuts is considered, so RBI has held rates steady since August after delivering a 100 basis point cut in the first half of the year. Also, softening food prices and adjustments in the GST slabs have brought down the inflation to just 0.25%, creating a more comfortable policy environment. If you look at the current rates for the policy rates, the repo rate stands at 5.5% with CRR standing at 3.3%. Now, the interest rate trend for 2025. So rates have been gradually moving lower during the year and starting at 6.5%. January, slipping down to 6% in April and further easing down to 5.5% in June. And from there, we have seen a stable rate until September. If you see India's GDP trend, the growth has been picking up momentum from Q1 FY25. If you see, the numbers were around 6.5%, which have come up to 8.2% in Q2 FY26. So the recent numbers show a strong acceleration in growth, which may give the MPC confidence even with a rate cut. Now, you're talking about the IIP trend. So industrial activity, however, presents a mixed picture with IIP slipping to just 0.4% in October, pointing to volatility in manufacturing and output. But overall picture, if you talk about, we see that the domestic inflation has been softened, growth holding is strong, and global trade risks still loom. All eyes will be now firmly on the MPC meeting, with the street strongly expecting a 25 basis point rate cut.
Okay, so that's largely the expectation that the street is penciling in a 25 bips cut later today. All eyes are going to be on the policy and the speech that begins at 10:30 a.m. But on that note, we'll slip into, in fact, we'll wrap it up on this edition of Market Cafe. Thanks so much for tuning in, but stay tuned because the market takes all the action ahead.